All right, cool. So we'll get started with the change in state of delivery stuff. Yeah, if you don't mind, John, I'll go over the DMs and stuff like that. I'll count it as the homework. Anything that you guys DM'd me for everybody that said that they're cool with me opening up those DMs and looking at your charts, we'll definitely do that. I saw someone tag me in trade ideas too, uh, so we can look at that as well. All right, cool. So let's start by talking about the change in state of delivery stuff again, okay? So, the easiest place that you're going to be able to see this, guys, is going to be in candles 2 and candle 3 of a swing point, right? AKA candle 2 and candle 3. There's always going to be a change in state of delivery, and there's always going to be an order block in these two candles that you can typically trade. Now, you won't always get the trade if you're waiting for the retest of the order block, but pretty much there's almost always a change in state of delivery. So before we do that, I just want to show you guys something. Okay, I want to highlight to you guys the reason that we're using the 4-hour candle, okay, and why it's so important. Can anybody just from last session, uh, can anyone tell me why using the 4-hour candles is important? Why it's higher probability, perhaps? Any ideas? Perfect. Nice, Spartan. Absolutely. Mm-hmm. Exactly. So if we look, right, remember we have the 10 p.m. 4-hour candle. We have the 2 a.m. 4-hour candle. Then we have the 6 a.m. 4-hour candle. And then we have the 10 a.m. 4-hour candle. Candle one, two, three, four, right? So like I told you guys in the very beginning, what's so rewarding about learning in a structured way, um, from somebody who's done it for so long, is everything starts to come together, you know? I don't even need to teach you guys how to put it together. It's just implicit already, right? So a lot of the things that we learn here together, you're gonna start seeing that they add layers of clarity. And if you guys haven't experienced this yet, and you haven't watched all the live streams, you should go back and do that because that's what should happen. I've been teaching for a long time, and it's one of the most rewarding experiences, not just for um, a student, but even for the teacher. You know, when you see these things come together, it never gets old. I never get tired of talking about this stuff, and I never get tired of seeing it. So when we talk about, that's a really good question. Whenever we talk about time zone, guys, we want to talk about using UTC -5 New York local time every single time, okay? I'm not based in this time zone, okay? This is 2 hours ahead of me. I'm mountain time. So it would be UTC -7 for me, I think. But the reason that I have it based UTC -5 New York is so whenever we talk about time zones or kill zones or anything like that, we all need to be on the same page, okay? And if you guys haven't figured out yet, right? No, 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 not UTC -7, UTC -5, New York local time, right? That's what you want to set your chart to, even if it's not your time zone. But like I was saying, if you guys haven't figured out already, I do trade ICT concepts and um, yeah, so we're always going to be using New York local time. Okay, so 10 p.m. Eastern, 2 a.m., 6 a.m., 10 a.m., right? Uh, or no, it's not Eastern, is it? Hmm, maybe. But yeah, New York local time, right? Okay. So I just want to show you guys something, right? You guys remember how when we did the market structure uh kind of lecture and we came all the way back here and we were talking about looking at market structure breaks and how they create good fair value gaps, right? And we were looking at this and we could actually see these things playing out, I want you to look at the 4 hour, right? And let's look at where a lot of these moves, where they start on NQ, right? Let's remove these drawings, right? 10 p.m. candle, 2 a.m. candle, 6 a.m. candle, 10 a.m. candle, right? Think about it. We've been focusing on trading candles 2, 3, and 4. 2, I've been saying, is a little bit more advanced. You can still trade it. It is a little bit harder because you don't have that confirmation yet. Um, but think about it, right? We're focusing on candle 2, 3, and 4. Okay, so in this instance, we're focusing on the 2 a.m. candle, the 6 a.m. candle, and the 10 p.m. candle, right? So if you notice, candle 1, accumulation, candle 2, manipulation above candle 1's high, closes back inside candles 1's range. Candle 3 expands lower. Candle 4 expands lower, right? Even though this wick got eaten up, there that's a really big move. Let's see how many points that is actually. I mean, yeah, that's 350 points. If you catch a 350 point move, like you pretty much fucking passed your eval, right? Um, so let's keep going, right? 2 a.m. candle, 6 a.m. candle, 10 a.m. candle, and I mean, you could do the 2 p.m. candle too, but we're just going to focus on those, right? All the way to the 10 a.m. candle. So notice, right, that a lot of these moves, 10 p.m. candle, Asia's high gets taken out by London. We close back inside candle 1, and then that 6 a.m. candle expands, right? Where is it expanding to likely? Um, we would be looking at this low, right? Because we're in a bearish market. So any bullish fair value gaps in a bearish market, we anticipate to be disrespected, right? So then look at that 10 a.m. candle, gives us some more expansion lower, right? So if we can, once again, if we can continue to take all this information that's being thrown at us, right, and so many different candles on a chart, and start to condense it to now a 4 hour candle, a 4 hour time window, right, and really focusing on that, it's going to make our lives significantly easier, right? As I'm sure that most of you guys have probably been experiencing already, um, a lot of what I'm teaching is to simplify your process, to even have a process. But you know, if you've been trading for a long time, you've developed processes, right? And maybe they didn't work too well, right? Or maybe they were too complicated, too many indicators, too many variables to it, right? And what we're gonna keep doing, right, is that same thing. We want to make things easy. We want to make them simple, right? I want to be able to uh mic out. What? You guys can't hear me anymore? Can you still hear me? Someone tell me. Yeah? All right, cool. Don't scare me like that, Tio. Come on, man. Nah, just kidding. But yeah, sessions are very important. Yeah, he's the only one that can't hear. Bro's fucking making me think that I messed up or something. I was like, no, bro, I did not just talk all this time for nothing. Um, but yeah, so as we can see, right, a lot of the times that's what we're gonna be seeing with these candles, right? These are where the swings are typically forming, right? So as we get more advanced, we're going to talk about what are the things that could happen inside of those 4 hour candles, right? And we're going to condense it down because there are some things that cannot happen, and there are things that give us clues. Like, for example, if London did this, then New York will do that, right? And we'll get there when we get there. But once again, 10 p.m. candle, right? Asia's high gets taken in London, right? We close back inside candle 1's range. Candle 3 and 4, they expand. 10 p.m. candle, London takes the high, closes back inside, and we distribute lower for 6 a.m., 10 a.m., and even that 2 p.m. candle. right? But we're mainly focused on candle 3 and 4 for our highest probability. So do you guys see how, once again, right, we're looking at something that takes place a lot, right? And whenever we see something that takes place a lot of times, that's something that we can take advantage of, right? So once again, let's go ahead and look at some change in state of deliveries, and let's look at some order blocks. Okay, so we're gonna do what we typically do. All right, we're gonna map out candle 1 so we don't lose ourselves. So I don't know if I would call it ranging personally. There's a lot of really big moves. Candle 2 inside, not inside, top center, and then candle 3, candle 4. And when you guys send me messages and stuff like that, this is a really good way to annotate. There's obviously there's other ways to do it. You don't have to do it like this, but um, this is a really easy way visually when we drop down in time frames. It's gonna make things very easy to see. Okay, so let's go ahead and drop down to the 15-minute. Okay, so once again, candle 1, we'll map this out as Asia. Candle 2 about is London. Trending. Yeah, you're right. Candle 3, we're gonna have New York. And this is also New York as well. All right, cool. So once again, what's the first thing that we look for, guys? What's the first thing that we need to happen before we do anything? Something needs to be hit. What needs to be hit? Very nice. Very good. Yep, you're all very right. We gotta wait for us to hit a key level. We gotta wait for London to manipulate above or below Asia's high. Because Asia, as we talked about in that last session, is a key level, right? It's session liquidity. It's liquidity with context behind it, right? So once we take out that high, right? Who can tell me what I'm looking for? As soon as we take out the high, what am I looking for? Perfect. Change in direction, I'll take it. Change in state of delivery is what it is, but change it, we'll take that. Right. Okay. So one thing about order blocks that we didn't talk about last time, it's going to be a lot better if you have a thicker candle like this, right? As opposed to something small like this one or something like this, right? A thicker candle is always going to be better, right? Who can tell me how a change in state of delivery happens? Where does price, if this is the order block in question, right? Where does price need to close below on this candle in order for it to become an order block? Who can tell me? Yeah, it absolutely is. That does happen sometimes. Um, Candle 3. So pretty much the question is, right? Where, yeah, okay, below the red. The correct answer is the opening of the candle is where it needs to close below. Okay, let's just assume, right? Because this one doesn't have a wick, but let's just assume, right? Let's draw a little wick on here. Even if price closed like this, right? It's still a change in state of delivery because it's not the close below the low. That would be a market structure break. We're looking for the close below the candle's open, okay? The opening price of said candle, okay? So think about it. If you guys felt good about the inversion, right? And understanding how that is going to be um the kind of confirmation that we're looking for. This looks really bad. I'm just take it off. Um, it's the same thing, right? What was our framework, right? We're just changing it up a little bit. Framework, we're waiting for session liquidity, confirmation. Also, I guess part of the framework is using the candles 1, candle 2, and candle 3 for sure, right? What are we looking for confirmation? Change in state of delivery. Yup, exactly. So we're not doing anything very different. The only thing that we're doing is we're tweaking a little bit our framework and we're tweaking the confirmation. The confirmation before was the inversion fair value gap. The framework before was IRL ERL, which I still think is worth doing on the higher time frame. You don't have to, but me personally, I prefer it. So what's the difference between change in state of delivery and breaking market structure, like closing below the body or closing below the wick? Um, the difference would be that a change in state of delivery is an entry technique, right? As soon as we close below this, I could enter, or I could wait till we move back up into this order block, then look for a trade there, right? And then we go lower. Or, right, and here's the difference, is that when we get a market structure break, we don't typically enter off of that. We use it as context. So in this example, we did break market structure lower, right? Which tells us that this fair value gap right here, it should hold and send price lower, okay? And you can notice, right, it does color a little bit out of the lines, and that's okay. That happens sometimes, right? Um, even if you entered this trade based off of the fair value gap, your stop loss would have been up here, or it should have been up here, right? You wouldn't have gotten stopped out. You're fine. Okay, so that's the difference. So notice, right? Then we go into New York. What happens in New York? We hit the order block that was made during London session, and we make a new one in New York. So it's for me personally, when I start seeing something like this forming and then I see green candles forming in New York, I'm usually getting ready to anticipate that that's going to turn into an order block. Now, we didn't come all the way back up into this order block, right? But going back to the uh, market structure break idea, right? We get a big market structure break, which means that these two fair value gaps, right, are going to be high probability, right? Which, and if we used premium and discount, we would be looking for this one, right? Not really this one. Even though it did give an IRL to ERL move, um, which is still good, right? So there we have another order block here, right? Because we have a series of up close candles or just one up close candle up into a key level, which is the London order block that was formed after taking Asia's high, and then we send lower. So I could have entered here if I wanted to, and I could have gotten an easy 1-to-1. Just put my stop up there. Could have gotten more for sure too, but I don't usually like to be in trades for that long. Yeah, definitely you can apply this to crypto. Yeah, it's a normal reaction to have that kind of like panicky feeling when it's not doing the thing that you want it to do for sure. Yeah, I can understand that. Um, one thing I wanted to mention was just a little side topic real quick. Let's see if I can find it. All right, well, I'll find it right now. But I wanted to look at the seasonal tendency chart and kind of show you guys where we're at right now because it's kind of playing out a lot like we were talking about, right? So we're a little bit, the red line is where we're at. But moving into the end of February, right, we're getting that really, really big drop off. I don't know if we're gonna get this false move up that we typically get. Um, you know, did we manipulate above last month's high? Let's check real quick. No, we didn't, but last month was candle 2. Here's candle 3 coming in, right? Probably going for this low down here on NQ. But anyways, just wanted to briefly mention that. Uh, but yeah, so that's, we can keep looking at a couple more examples, right? Let's go on the 4 hour. Let's see if we can find, where was it? Is this one? Yeah. Okay, so once again, gonna map out candle 1, this candle 2, and candle 3. Now notice, guys, I'm giving you a very specific place to look for these. You don't only have to look for order blocks in 4 hour swing highs and swing lows. Um, you could look at it in a daily swing high or swing low or a weekly, right? You have a lot of options. You don't just have to look through one scope. Okay, so let's go back on the 15-minute. Let's come up here, right? We should already know this by now. Asia, London, New York. Accumulation, manipulation, distribution, right? We should all be pretty familiar with that, okay? So we take out Asia's high. We don't close below these up close candles, right? Take out another high. We do close below these ones, right? We close below those candles there. We have a change in state of delivery here. You could enter there, put your stop at the high, target Asia low, or target relevant liquidity, right? We get another up close candle, it gets closed below, right? We get a market structure break, which produces what? High probability IRL. Key off of it, create another order block, right? Up close candle into a key level, change in state of delivery here. Guys, any time a order block is formed, I expect the high of that order block to be a protected high. I don't want to see price take out this high whenever we make an order block. Okay? It's a really nice and effective, easy way to follow price in the sell side of the curve. Right? So what happens during New York? We come up, we hit this order block, right? And then we make a new one. Up close candles into a key level, get closed below with a market structure break, high probability IRL, tap it, and bang. That's the trade right there. This is what you want to catch, right? You want to go in short here, have very little resistance against you, and then eat up something like this, right? And once again, market structure break, high probability fair value gap, retest, could have entered there. There is a multitude of entries that you guys could get in there. So, is there anything on that that we're still kind of iffy about? That we still maybe have questions? Um, anything like that? Can also look at some daily examples too, right? Let's look at a daily example. What do we have here? Daily inversion fair value gap, right? We hit that key level, right? Here's our candle 1. Or we'll keep doing it how we've been doing it. So massive candle 1, by the way. Well, we are on the daily after all. So there's candle 1. Here's candle 2. And here is candle 3. Okay, So who can tell me what time frame am I going to from here? From the one out or from the I just already said it. My fault. I already gave the answer. But yeah, so we would be going to the 1 hour, right? So let's go look for the 1 hour order blocks that are going to be forming in this swing point. Remember, guys, look inside the swing points when you're trying to find order blocks, right? Here's a really nice market maker sell model as well, right? That we've been working with. Here's our original consolidation, right? We're gonna move up, smart money reversal. Now we're on the sell side, right? Which you guys should be able to see at this point. Buy side of the curve, smart money reversal, sell side of the curve, right? So let's take a look. Candle one, candle one's high here is our key level, right? We move into it. We have a series of up close candles. Do we close below it? No, right? We still keep moving forward. We keep respecting this fair value gap. We go up again, right? Do we close below it? No, right? We make some down close candles, another up close candle, right? Then it gets closed below here, which is a massive, like, this is a change in state of delivery that it's like, okay, that's going to be really difficult to get into if you're staying on the 1 hour. If you drop down to the 15-minute, there's probably something there. Um, but yeah, change in state of delivery here. This is now an order block, right? Let's look at what happens in candle three. Make up close candle. We don't close below it. Up close, up close, up close. We close below it here, right? And remember, I'm taking the series of up close candles, right? Gets closed below on this small reversal candle. What happens? Price moves back up inside this order block, and it sends us lower, right? And once again, these are the moves we want to catch. Here's candle one, there's candle two, candle three and four give nice amount of points. Can you explain why you choose last green candle in candle two? Yeah, sure. Because we didn't close below this, right? First, we made another up close candle. That's the first one to get closed below. So if we look at the series of up close candles, right? Do these get closed below? No. Do these get closed below? No. Does this one get closed below? Yes. And I wouldn't have taken anything from here because we haven't hit our key level, which is candle one's high, right? And even then, there is nothing here, right? There's no, I mean, it's a giant series of up close candles, so I would be waiting for all the way down here. It's like, yeah, right. I'm just gonna look for something more recent. Okay. So, any questions on that stuff? Did this help? Can we move on to maybe the homework? And if you guys don't got it, that's fine. You got to make sure that you at least have the courage to say, I still don't understand this or this. Cool. Red is New York. Oh no, red is London. Oh, actually no, it's not even a session. We're on the 1 hour right now. Um, so no. We're looking at the sessions on the 15 minutes. Right now we're using a 1 hour. But that's a good question though. Yeah. Yeah, you get the reps in, I promise it's gonna help a lot. Yeah. Yeah, exactly, right? I mean, guys, I'm not gonna lie to you, like we've been on the fucking money here, right? All the way we started doing streams what back in like pretty much back here as we were moving into this fair value gap right before is when we started, right? And we used the exact same thing, right? What we used was not any different really, right? Let's do the same thing on BTC. What's the key level? Weekly fair value gap. right? What are we looking for to be targeted? Sell side liquidity, right? There's our framework. Yep, ERL, absolutely, right? What are we waiting for some extra confirmation? Reversal candle, taking out candle one's high. Here's candle two. And so like I said, guys, the more that you guys show up, the more that we practice together, even if you've already heard me talk about this, even when I talk about it, I still walk away with some insights that I probably didn't have before, right? Um, is it this one? I think it's this one. Yeah, I use the Lux Algo ICT Kill Zones toolkit. I turn off everything except for the sessions. Good question. The reason that I highlight 4 candles is because candles 3 and candle 4 are very reliably uh, going to be expanding. Now, is an extra added insight, I'm mainly looking for candle 4 to expand when my drawn liquidity has not been hit. Drawn liquidity is something that you guys are going to hear me say a lot. I want you to think of it very simply as where is price drawing to? If I say that this is the draw on liquidity, then that means that price is drawing to this low, right? When candle 3 expands but does not hit our draw on liquidity yet, I can I can expect that candle 4 also is going to expand because our key level hasn't been hit yet, our draw on liquidity. No, I'm not highlighting any market structure break here, even though there is a market structure break on this candle. I'm not mapping it out. Nothing on here has mapped that out. All I'm mapping out here is a low, a swing low, right? Because from IRL, where's the draw on liquidity now? To ERL, right? So that's why that low is highlighted. Okay. So if we go on the weekly, what time frame are we going on to, guys? The 4 day, the 4 minute. Nah, I'm just kidding. I'm not gonna tease you guys like that. Yeah, you're all right. 4 hour, right? So let's drop down to the 4 hour and let's see what's up. Okay, so take a moment, take a look at the chart, and I want you guys to try and find it yourselves. I'm gonna give like a minute, okay? You don't have to send a chart, you don't have to say anything. Just look and see if inside this candle too, you can find it. Where's the order block that you would have used? Shit, John's out here. John said, I know. I'll give you the price and everything. First dip on break of structure. Okay. Okay. Also a very good answer. All right, cool. So let's do it together, right? First of all, I'm not looking for order blocks yet until price has come all the way up and hit this key level and taken out this high, right? There's no order block here, right? Because I'm looking at these up close candles, right? We would have to close all the way below here. So there's no order block that's been made here, right? We get another big candle. We would have to close below here to get an order block, right? We don't. We create new up close candles and then we close below them while breaking market structure at the same time. So you, John, Kickass, Chemo, all very correct. Great work. Right? So there we go. There's our order block, right? Could even actually take this low as well, because it's the series of down close candles, right? Which is that a green candle right there? No, it's not. So we would just mainly be using this one. Okay. So let's go ahead and map that out. Okay. And look at what happens. Price moves back into it, resistance, resistance, some consolidation, boom, expansion. What happens inside candle 3? If you're confused because I didn't use this one and I'm using this one, I'm just looking for the last up close candle before we get closed below, right? This is not the last up close candle. This is, right? Because we have this bearish candle in between them. Okay, so don't get confused. We're just using the last up close candle. Do we close below the opening of this candle? Yes, right? We don't care about the low. We just care, do we close below the open? And yes, we do, right? So then we get an inversion, right? We get a market structure break. We get a whole mess of things that we've been talking about that shows us we are on the right side of the market, right? So let's go into candle 3, okay? Up close candles into a key level. Why is this a key level? We had a big market structure break. These two fair value gaps are very high probability, right? So we get to move into it. Now, this might confuse you a little bit. I'm going to ignore this doji candle, right? And I'm going to take this one instead as my order block because they are thicker candles, okay? Sometimes you want to ignore the dojis. So we get a change in state of delivery here, right? Also notice that these two candles, they encapsulate this candle. Maybe not this small outer wick, but this candle closes inside of these two, okay? Change in state of delivery here, you could enter right there, or you could enter off the retest on the order block and boom, price goes lower. Okay, candle 4, let's see. Change in state of delivery, no. Change in state of delivery, no. Change in state of delivery, no. Change in state of delivery, yes. Right? Up close candle gets closed below here, can enter right there or wait for the retest. We get this market structure break, thus creating high probability. IRL, we tap into it, get a nice candle 1, 2, 3, 4 expansion, right? And so on. Up close candle gets closed below here, change in state of delivery, price moves back up into it, rejects, creates a new order block, right? CISD if body closing below the opening of candle. Yep, that's exactly right. So we close below this one right here, change in state of delivery on this candle, price comes up, taps the lower end of the wick of the order block, rejects, sends lower again and again and again. Right? Same thing here, close below, comes all the way back up. Does it take out the high? Nope. Sends back lower. New order block created, right? Price moves back up into it. There's also a fair value gap in here, and then we move lower. Okay, so hopefully that clears up the order block stuff. Yeah? Any questions on it, or are we good? Nice. Nice, okay. Sweet. Alright, let's get into the homework. Um, T.O. I already responded to you on the DMs. Let's look at John. John's been putting in that work, guys. I'm not gonna lie. Alright, you guys can see the DMs, I'm assuming? I guess I can't look at chat at the same time. That's okay. Alright, cool. John sending me some good words, some good vibes, showing his chart, right? He's mapping out accumulation, right? Candle 1, manipulation candle 2 into a key level, candle 3 distribution, candle 4 he has E for expansion, distribution expansion, they're the same thing. He's got his IRL ERL rules. He's looking at the ERL lower, right? Because we're framing from weekly IRL to weekly ERL, right? And then he's also got this weekly fair value gap down here. So very good chart, very clean. He's got his low resistance liquidity mapped out, right? All of these, well, small mistake here. This is not an ERL, right? Because it would be this one. Sorry, mic disconnected. We got an ERL here, right? We've got some more built up ERLs, right? All up here. There's that low resistance liquidity. Um, we can see that we hit this daily this daily fair value gap all the way up here. We started rejecting, right? Huge daily order block, come back into it, and price continues to move lower. Got a nice premium and discount mapped out as well. So it's good work on that. Okay, based on this, I'll start saying that my bias is bearish. And I mean, look at this, guys. Hats off to John. You know, this was yesterday, and he's over here telling me that he's bearish at the moment. So he's not looking for any long positions. Apart from this, I saw that price has already mitigated an ERL on the left-hand side, creating a new one. Now it is heading to IRL. That was already touched as well. So in theory, we need to start moving towards the next IRL that is placed at $3,000. Apart from this, using PO3 rules, the last candle is expansion, implying the downtrend will probably be over soon. So now we'll be looking for an entry on the 4-hour time frame if price inverts. I've drawn. Okay, let's take a look, right? So right away, we should already start seeing a market maker sell model. This low right here, I'm always going to be paying very close attention to it, right? We had market structure breaks on these lows, right? So any move back up into any of these fair value gaps that get left behind, we're going to look to possibly go short on, right? Um, did that inverse, John? I don't think it did. Um, but if you wanted to take something on it, I maybe wouldn't have blamed you. But um, yeah, actually, maybe we could check real quick. What is that at? 2500? Let's see. 2500. I think it was one of these. Let's check, double check the date. February 3rd. So it was over here. Maybe this one. But yeah, I mean, pretty much all across the board, there are no inversions. So, um, yeah, he didn't go long, and yeah, he was right about his bias about price going lower. So very nice on that as well. Let me just do a quick check on chat. No, no what? Tell me. Oh yeah, you didn't go long. Okay, cool. Um, are those order blocks I have marked correct with CISD? You mentioned earlier that OB is a series of opposing candles, but you have not mentioned how many candles we should count. In one example, you said 3 and another 2. Thank you for your time. As always, bro. No problem. There is no number of, hey, you can only count 3 candles or you can only count 2. It's the series into a key level. It could be 4, it could be 5, right? It could be more than that. I'm not sure. Uh, you see here we have 3, here we have 2, right? And potentially just 1 here. But yeah, these look correct to me. Yeah, CISD here. Very good. CISD here. Very nice. It was kind of throwing me off that you had your your chart colors inverted for a second. But yeah, those are correct. Very nice work. This would have been a 3R winning trade. Very nice. Very good work. What is this on Bitcoin? Yeah. Nice. 3R is that's fucking good. If you can consistently get 3R, I mean, you're killing it. You're making a lot of money. I think that your win rate can literally be like 25% with a 3R uh, consistency. For real. John is cooking. Let's see who else. Who else DM'd me? Um, Kickass. All right, cool. Let's check out Kickass's chart. All right, we got a nice dark mode chart. Okay, okay. Okay, we got some inversions down here. I think he's using nephew Sam's indicator, or are you drawing these yourself? Looks like the indicator. Um, 15-minute strong, 15-minute weak. I don't know what that means, but I do like that you have this range mapped out. And like I told you guys, right? When when the lows, when the sellers, or sorry, when the longs get punished, who's next? Shorters, right? And we go up to these relative equal highs, right? That looks very nice. Ah, okay, okay, I see what you have. You got a weekly 4 hour, 15-minute. Okay, that makes more sense. Um, weekly fair value gap. Now, I'll be honest. When weekly fair value gaps have already been used, I pay a little bit less attention to them. Um, because they're more like footholds. Like I'm just gonna be looking for price to invert that, right? Just like how you did with this one, which is good to map out, right? I really like the standard deviations you've got going here. They look very clean. They're very good. Yeah, solid chart. Is okay, let's see. On the fib level you explained today for retracement, is that the correct candle spot on my weekly? Yeah. Yeah, it looks good to me. Yeah, great work, honestly. Let's go back to chat. Yeah, you guys are cooking with this shit. You're learning very, very fast. So let's see. Might have been it. Right? I'm not missing anybody. Let me check the ATS Discord. Shared and trade ideas? Yeah, okay. I thought I was missing something. Alright, cool. Um, okay. Let's see. Is that all of them? Is it just the two from you, Victor? Okay, we'll take a look at this one too. Because I don't think I looked at this one. Right, John? We didn't look at this one? Low resistance liquidity, market maker buy model, right? Weekly discounted IRL. This one is not in discount. If we take this whole range, right? This one is in discount, this one's not. So that's why we keyed off of this one and not this one. Okay. Um, I would probably take the. Oh, actually, I remember you. I think you did it on a lower time frame. Okay, yeah, yeah, no, that's fine, that's fine. So yeah, good chart here. Very nice here. I personally, if I was entering, I'd want to enter inside this fair value gap. Um, and I would put my stop below the candle that created the fair value gap as well. So good stop placement. Um, slightly rushing entry, but at the same time, if that's your TP target, then it's fine. And also, usually, if my liquidity is higher than my projection, I will take some off at the projection more often than not, as opposed to trying to ride the full move. Because there's going to be times where it goes against you, and once again, our job is to be profitable, not right. We're not trying to be in the business of, hey, we're right about things. We're trying to be in the business of we make money, right? On weekly time frame, prices touched a previous 4 hour fair value gap and made a new high, creating a new ERL. After this, price action retraced to previous IRL, which got respected. Continued at this point, I drew fibs on the last swing point. Prices already reached -2. So when we say -2, we put STDV, standard deviations, if you guys want to use correct terminology. But yeah, broke it after consolidation, momentum, 4 hour candle. Yeah, solid. You're looking at the right thing, which if we go back to hype, right, um, it did take out that high, right? Just like you had it mapped out. So solid, solid work. Check chat real quick. How do I check chat? There you go. This did not work out. I rushed. Yeah, yeah, that's okay. um, a slightly rushed entry. I don't even know where would the entry have been at actually. I'm kind of curious. I guess we'll take a look right now. But yeah, let's see. Thanks for explaining CISD. Could you review this? Also Q, will you place your entry like this or wait for a close and then enter? In this specific example, I'm not fucking entering here, bro. Like the risk to reward is just not going to be very good to me. So yeah, I would have it like this, or I would be entering off of the midpoint of the order block, which we call the mean threshold, right? So probably would have been a nice top tick, but this is a very good entry, good stop loss placement, good target, candle one's low, very nice. So this one I would have entered here because the change in state of delivery is not so far from the high. But even then, we change in state of delivery here, and then we retest, right? Enter. Good stuff. Probably would have been targeting these relative equal lows, but this is already like what? That's like 2R, maybe even a little bit more to be honest. So it's pretty solid. This was making me laugh earlier. Yeah, bro, I told you guys. It's the algorithm. Why is price stopping right there? It's coded. Hmm. Is this in Asia? Asia high probability? I believe this is Asia. I think you meant to put London high probability order block. Up close candle, change in state of delivery, can go short anywhere inside of here. You went short here, bought back here. Very nice. Good trade, bro. Solid. Solid work, guys. Yeah, it was funny. Price retrace below the fair value gap. That's okay. It happens, bro. All right, cool. Okay, so I didn't miss anybody, right? That was everybody's charts. Really, guys, I'm going to keep telling you guys this over and over. If you guys can post charts, if you can send them to me, whatever. Right now, I don't know how long I will be in this Discord. I don't have any plans on leaving right now, but um I imagine sometime in the future I probably won't be here. So right now you have the unique opportunity to pick my brain, and ask me questions and practice and get some feedback for the concepts that you guys are learning here. So take full advantage of that. Put some chart time in. As you guys can see, right? People like John, people like Kickass, Chemo, like Victor, everybody that's putting in the work, they're seeing results. They're seeing clarity. They're sending me messages saying thank you, and it's for a reason. Um, so really good work, guys. Keep it up. And yeah, anything else? Yeah, bro. You can DM me, or if you don't want your DMs to be shown, you can send in trade ideas too. Whatever's cool. BTC bottom. Okay, cool. We'll cover that. I don't use moving averages. I don't use any indicators like that. Uh, any of the indicators that I do use, they're like lazy guy indicators. Like I don't want to mark out the kill zones myself, or I want to see the higher time frame candles at the same time I'm looking at the lower time frame. I'm using stuff like that. So, um, not something I really look at personally. I used to, but yeah. So for the bottom, I mean, damn, that's a crazy chart, right, guys? So let's kind of let's do what we've been learning, right? Let's go ahead and remove all this. Let's take our first set of standard deviations. Let's see where they lead us. Okay. I mean, this is Terminus. Terminus is all the way down here at 38K. I really hope that that's not where we go, but um, that is what the standard deviation say is a possibility. Now, we're in the 2 to 2.5, so we still have a little bit of time to maybe close back inside of this. Another thing that we can do is we don't just have to use this one, this standard deviation, we can also use this one here, right? Let's remove the 1 to 1.5 because I haven't talked about that just yet. Okay, so potentially I'm gonna look left, right? What's over here? We've got some lows, good bottom candidate, but notice, right? These two standard deviations that I drew, they're both pointing to this kind of area over here, right? So, I mean, it's not too crazy to think, right? I mean, look how much prices already pulled back, pretty much erased all of the Trump gains. And, this, like we talked about last time, this looks like a giant fucking market maker sell model, doesn't it? Right? That first move up, second move up, first move down, second move down, and then that final expansion lower. So yeah, it's looking pretty ugly, but I pretty much stabled all my shit the other day, or not even the other day, but back when this was happening, I was like, nah, I don't even want to hold anything after that. Which I had gotten a lot out over year two when we swept the high, and then the change in state of delivery, I also took some out, and then here's where I was like, nah, I'm fully out because I'm pretty sure we're going for this low, and I didn't want. I mean, I'm a crypto guy, so obviously I don't want to see Bitcoin shit the bed, but uh, it's part of the game. Sold to $7, yeah, bro, it's fucking bad, man. I mean, Sol. Let's see where standard deviations tell us about Sol. $40 Sol, zero Sol, bro. Sol's going to zero, guys. You heard it here first. You were gonna see it sold negative $10 very soon. Nah, just kidding. Probably yeah, that $40, $50 area. Let's see, maybe one more. Yeah, this low just got taken, but we're not reacting off of it at all. So yeah, even as low as $20, let's see what happens. We'll leave that on the chart. We'll see what happens and play it by the ear. I know, guys. Honestly, we'll just turn this into like a crypto cope support group for anybody that didn't stable. Yeah, send everything to fucking zero, bro. Fucking Tio, bro. Yeah. All right, guys. Well, um, next stream's gonna be on Monday, so that gives you guys a lot of time. For the weekends, me personally, when I was still kind of new to this, I would spend my entire weekends just practicing, just drawing up charts, different assets, getting as much done as I could. Okay, so I highly recommend you guys do the same. All right then, fellas. Appreciate everyone coming out as usual. Thank you guys for supporting the Twitter and Instagram. Once again, if you guys follow me, I'll follow you back. I'll support you guys too, always. And yeah, I'll see you guys on Monday. Peace.